Markets were higher today after the U.S. announced a trade deal with the U.K. had been reached. But when it comes to making a deal with Canada, our next guest says we can expect the U.S. president to throw some curveballs around the upcoming CUSMA review. Let's go to Kevin Burkett. He's a portfolio manager with Burkett Asset Management. Thanks for joining us today.
Good afternoon, Marilla.
So what stood out for you with this trade deal? And we didn't get a lot of details, but what stood out for you from what we know so far?
Look, I think today's trade announcements, you got to put it in the context of April, which was a crazy month by all measures. On the second, Trump's Liberation Tariff Day was really all about applying reciprocal tariffs broadly. More than 180 countries sparked a market correction that brought the worst weekly return of the S&P 500 since the 2020 pandemic. But since touching a low on April 8th, markets have recovered very, very quickly. And so today, I think mostly those wishes around coming trade deals were fulfilled. And we've seen the first of what Trump tells us. And I think markets expect of many new trade deals to come with the U.S. So there's, as you say, lots of talking points around the deal. I think the devil is going to be in the details. These details won't arrive for several more weeks while things are written up. But Trump was under pressure to tout a win here. And I think today's market reaction, which was positive but mild, S&P 500 today up a little over 1%, which I think reveals that a lot of those expectations had been priced in already. So no doubt he's going to point to elements as a signal to other trade partners. We know there's other discussions happening. So a lot of his audience is going to be other trade counterparties in terms of touting that he can make deals and that he's extracted some concessions from the UK. But as has been the case in the last few months, I expect we're going to see lots of dips and probably a lack of nuance in coming discourse around how these other trade deals come together.
Okay, so let's talk about Canada, the U.S. We had our leaders meet. I'm just wondering what you got from that. What did it signal to you? What did it represent?
You know, I didn't take that much from it. I mean, Trump tossed up his usual word salad, and Carney made some faces while he was talking. It was hard to discern who the stronger player was in that interaction. I think the tone was friendly. It was, so I think we can be optimistic, but I think you want to be very cautiously optimistic around any inference that a friendly interaction at the White House leads to a meaningful repair of relations between the two countries, which have become probably, most surprisingly, I would say, of all of the Trump surprises we've had over the last 3 months, really was this dissonance or schism that emerged between the two countries. So it's, I think, a positive step, but I'd be very careful to infer much more than that from the press junket that I saw.
All right. So along those lines, there were warnings today from the Bank of Canada Governor Tiff Macklem that a longer-lasting trade war does pose, of course, a greater threat to our economy. How resilient do you see our economy to withstand something that's going to go on maybe until, the CUSMA deal gets reviewed or even beyond that?
It speaks to what I think the primary risk that we see here is, which is that even if Trump can negotiate the trade deals on the terms he says he can, the discourse is causing erosion in sentiment, consumer sentiment, business sentiment. And so I would say from a Canadian standpoint globally, but Canada in particular, very uncertain economic outlook. I think you see ongoing discussion around battening down the hatches. Consumer Conference Board Consumer Confidence Index dropped to 86 in April. That's the lowest level since May 2020. So clearly there's evidence that consumers are less willing to spend. Fiscal policy is quite stretched. Monetary policy is uncertain. Some of the discussion between Trump and Powell is concerning. Canada has rates now materially lower than U.S. counterparts. Those rates rarely disconnect for long. So I would say the macroeconomic backdrop right now is something that investors should be considering very seriously when considering different exposures across their portfolios.
So what sectors then are you trying to avoid, step around? What are you looking into, Kevin?
I think, and this has been a consistent viewpoint I've expressed over the last year of appearances, we really want to find places where we think consumers go when they're looking for value. And what's nice is, when you think about industry classifications in a classical sense, you think about consumer staples, consumer discretionary. If you have the opportunity to look through and pick individual stocks, I think you can find names that are classed consumer discretionary, meaning cyclical names, but that don't have exposures necessarily to limiting consumer spend. So Dollarama is a name that we talk a lot about. And as opposed to, say, Bombardier recreational products, we talked about them back in October, expressed some skepticism about the name. I think if you can be in the needs category as opposed to wants, but still be in businesses that are growing, then I think you can succeed regardless of where tariff negotiations take us in the coming months, years.
You like Pollard Banknote, and I'm just wondering what you like specifically about Pollard Banknote.
Sure. So here at the firm, we manage about $500 million. And that sounds like a lot of money, and it absolutely is. But in the context of an investment management firm, it's a relatively small pool of capital to manage. And when we describe our firm's philosophy, what we talk about is looking for businesses that have quality characteristics as we define it. And we look to acquire shares in those businesses at prices that make sense in the context of those characteristics, but mostly in those businesses' ability to grow in the future. Any investment company is going to give you some version of that pitch on their philosophy. Where the proof point is for us is a process that makes that possible. And coming to our firm's size, we can find businesses, we think, that have all the same high quality characteristics of much larger companies talked about more frequently in smaller companies, and we can find greater disconnects in that quality price relationship. Pollard Banknote is a great example of that type of company. It's a long-standing Canadian business. It prints lottery tickets. It's in a highly regulated lottery industry. We would describe it as recession resistant. These government-run lotteries issue requests for proposal. There's really only three players in the space. Pollard is the second largest in Canada. The requirements to get into those contracts are very, very stringent around security, supply chain security, obviously. And so it's a very defensive end customer. And what we like about it is the company is valued very attractively. We see a few reasons for that, but principally I think there's a misunderstanding around exposure to tariffs. And that is that because those government contracts weight somewhat the location of manufacturing in deciding where to award those contracts, they have manufacturing infrastructure on both sides of the border, Manitoba and Michigan. And so we think there's a misunderstanding around tariff exposure. We think it's a stable business, and at next 12 months price earnings of around 10 times, we think it's trading at a very attractive level.
Kevin Burkett, sir, got to leave it there with you. We're out of time, but thanks for your time. I appreciate it.
Cheers.